A big week for the Industrial Development Corporation. Fitch Ratings upgrading the credit rating of the IDC to AA+, and it released results yesterday. It's also announced this week a strategic alliance with the aerospace company Aerosud Holdings, whereby it will take a 26% stake in Aerosoot. The IDC, of course, a self-supporting development agency that reports to the Minister of Economic Development. Well, to discuss all things IDC related, we're joined by the CEO, Jeffrey Nina. Great to have you with us, Jeffrey. So let's gloss over the results, because I think a lot of people are interested in where you're developing, where you're supporting. But very quickly, are the numbers getting better and better?
In terms of the approvals, 13.8 billion, which is 6% more than last year. That's a good number. It's not enough for what the economy needs. In terms of the disbursements, the second highest at 11 billion. That's actually the money that has gone into the economy, because there's always a lag before the approvals and the disbursement. Those are good numbers. In terms of the sustainability, which is the profitability, 2.2 billion before tax, which is also an indication of a good number. But what we need is employment. This time, jobs saved and created will be just about 20,000, a little bit below the 22,000 the previous year. I think that's where we have to pay our attention. The sectors that have benefited, largely the green industries, that's where we've seen it. The manufacturing is also benefited, mining, and then agro-processing. Yeah.
Well, your mandate is basically to create jobs, to support businesses, finance businesses that are creating jobs. What's your track record there?
I think if you look over the past, let's say 5, or even you go back into the new democracy about 20, I think we've done fairly well in terms of the jobs that we've created. And the jobs that we normally count, the 20,000 that I've mentioned now, is the direct ones from our projects. But we know there's also the indirect effect, which we don't count because we don't want to double count. So I think we've done fairly well, but we know the levels of unemployment are still high. So there's a responsibility as the IDC that we continue to support startups. We create new capacities, expansions. We expand the capacity so that then we can create even more, or at least help create more employment.
Well, one of the criticisms I've heard is that you focus on big industrial projects. So you now say you are moving to the smaller, to the startups, to the young people involved in startups as well.
In fact, people know the big ones because the value-wise are more exciting. If you look in terms of the numbers, this particular year, about 60% in terms of numbers, that's on the small and medium-sized enterprises. What we've also done 2 years ago, we were instrumental in ensuring that a new entity called Small Enterprise Finance Agency, SEFA, is born. If we look at its activities, it's approved over 1.1 billion, which is double what it's done in the past, just in 2 years. And it has disbursed over 400 million. So as far as the smaller side, SEFA is playing that role. So the medium size, we will continue to do that. Naturally, when we invest in one big one in 3 billion, I think that's what catches the people's attention. But in terms of these medium-sized ones, we do support those.
There's an argument that what we need in this country is the enabling environment for business to thrive. So not too much regulation, not too much red tape. What would you say to those people who would argue that we don't need this development push? We rather need to focus on that enabling environment, because it does get complicated. The development agencies, and just looking at one with the Youth Fund that was funded by the Youth Development Agency, by you and SEFA, and it creates another development body. So it seems quite complicated for the layperson. What would you say?
Well, there's different parties play different roles. We've got the government that will look at the policy environment to ensure that that enabling environment happens. We've got the development finance institutions that must take that initial risk, support those who want to expand, so that then that creates a little bit of confidence. And then you have the private sector and the commercial banks that will come in and complement. Now, what we need to do, which I think we've done fairly well, particularly in relation to youth, is to collaborate better. I think the criticism in the past is that you have all of these entities, they don't talk, they duplicate. But what we've done, particularly for the youth, at the back of the Youth Accord, ourselves, the IDC, SEFA, Small Enterprise Finance Agency, and NYDA have collaborated. We go through the country, we tell the youth what we offer, and we offer different parts. The NYDA gives the support in terms of capacity development so that those young entrepreneurs who want to start, at least are given a base either in terms of training, and then when they graduate, they come to either IDC or CFA to be able to access funding.
Okay, so they can distinguish where they should go. My final question, you were talking about this collaboration, and very interesting that you're now taking the stake in Aerosoot. And I find Aerosoot very interesting. I was visiting Airbus and they were saying Aerosoot has this amazing technology used in planes, but at that time there was not funding. But is this a change of tack? It used to seem to be project-based, going in and out. Now you're taking a substantial stake in Aerosoot.
We're taking 26%. We've supported Aerosoot when it was difficult. That support was just purely on debt. We supported, I think, since 1997, actually. They went through difficult times. We were there, we restructured. Aerosoot is very key in advanced manufacturing. In every A320 and every A350 that you bought, there's a component that comes from Aerosoot. That to us is good. Now, if you look also at they have about, I think, about 800 or 850 odd employees, and the majority of those are under 35. So here we have an entity that is tier 1 and tier 2 suppliers by the major players, Airbus and Boeing, here in South Africa. So it was just logical.
Global player.
It was just logical that as IDC that we extend our relationship not to only just provide debt, but also provide equity.
Yeah, and that's real public-private collaboration. Absolutely. Thank you so much for your time. That was the head of the Industrial Development Corporation, Jeffrey Nina.